Hi, how's it going? Welcome to the 11th live stock market Q&A session of the WWS Financial Research EXP Milan Albert is here. How are you? How are you doing?
How's it going, Antonio? Well, like you said, this is already number 11, so it's becoming a tradition, and we're enjoying it too. It's an entertaining format and also much more enjoyable because it has a bit of interaction and energy, which is sometimes missing from the others. So honestly, I'm really happy about it.
Fantastic. All right, well, let's not waste any more time. There are already questions in the chat, and as we always do, Albert, before we get started, let's spend a couple of minutes on the main topic we always talk about, if that's okay with you. As you all know, the format is that Albert starts by talking about the topic that's currently making headlines in the markets, and specifically, that's what we've set for today's show. Trump sparks a gold rush. So, what's going on with copper this year? And platinum, we're seeing metals on the rise. As many of you watching know, you're subscribers to Financial Resi Sir. Watch out for what's coming with Financial Resi Sir. Let me make a quick aside here because the portfolio is at all-time highs and the coming weeks are going to be interesting. If you're on the email subscription list, you'll be getting a couple of emails these days specifically about the live session Albert will be doing next week with subscribers, which is no small thing because we're going to talk about how the portfolio will be positioned. Some companies have already completed a cycle, so we'll be looking at others. So, well, I'll take this opportunity to make that little plug. Take advantage, because a lot is coming to Financia Reserve and there will be plenty of new things. If you're not on the email list, in the video description you'll find how to sign up, plus a video where I explain common investor mistakes. End of aside. Seeing today's topic, Gold Rush, what's going on with metals?
Well, today we just happened to pick a day that I'm not sure if it was the best choice because everything turned around from morning to afternoon in these commodities, right? Especially in precious metals, which had been on a fantastic rally. In fact, today silver broke through 50, which is no small feat, but they've pulled back a bit. Right? And with copper, it also reached 5.25, and even though it was up to 5.11 during the day, it has corrected slightly. In any case, right? Structurally, what's going on? First, these sectors or industries have underlying supply problems. You know, the best deposits are already exploited. Humanity has extracted minerals for a long time, and the best, most obvious deposits are already exploited.
It's very difficult from an operational, regulatory, political, and so on standpoint to bring a new deposit into production.
We've seen this a lot. For example, just this week with the delays at Quebrada Blanca 2, one of the largest copper mines. It was budgeted for 10 years, and they're already at 16 with higher costs, lower production, guidance dropping, and so on. In other words, it's not easy to bring it online, and on top of that, demand is insatiable and keeps growing. So there are some underlying tailwinds, let's say.
And then, as the title says, with Trump being the one who sparks the fever, we're seeing how, ever since geopolitics changed radically, which was in 2022 with the invasion of Ukraine, the world is clearly becoming multipolar, spheres of influence are being divided, political alliances are shifting, and so on.
So we're seeing that it's no longer just about economic returns, but also about what's known as resource nationalism, which is basically making sure that your country or your sphere of influence has access to minerals and critical raw materials for new technologies, key events, or let's say strategic industries, and so on. So that's what we're seeing with Trump taking sides, especially getting involved in a lot of companies. We've seen it with Intel, we've seen it now with Trilogy Metals, and so on. So that's changing the rules of the game, because now it's not just about the return anymore. NA is doing very well, the models are doing very well, but in the end, the need to ensure a stable supply is also having a big impact and is leading many companies and industries to achieve spectacular returns.
Do you see this as sustainable? I mean, do you think this can last over time? Or let me put it another way. Do you see a 2022? Do you even see a possible inflationary rebound?
Inflation, not so much for now, because, for example, the metals that are going out, industrial metals like copper, are definitely going to have an impact, and we'll see what happens there. Gold has little industrial use, a monetary metal. Silver has industrial use, but its rise has been sluggish. Energy hasn't joined the rally. I think it will come, but we're not there. So I don't think this is what's going to trigger a new inflationary wave, at least for now. Do I see it as sustainable? Yes, these are industries deprived of capital, and now interest is coming in for the first time. So, well, yes, I do see it as sustainable, right? You have to be able to tell the junk from the good stuff. But yes, a clear example, Antonio, that we talked about today is that we started talking about PGMs when palladium, platinum, etc. were at $1,000, $900. They're at 1,700, 150, and research firms are jumping on the trend. Interest is coming in. We've been positioned for 70%, and the company we were holding, one or two we were holding, one of them has doubled. We were positioned in the trend. Institutional attention is starting to arrive.
Perfect. Well, after this first, let's say, commentary from Albert analyzing what's happening today with gold, platinum, and so on, we already have a lot of questions. Let's go ahead, if you're okay with it, Albert, and share the platform we use, which is Investing Pro. As you already know, they're a partner of Locos de Wall Street, and also, with the link in the description and the QR code I'm going to show on screen, if you subscribe to Investing Pro using our code and our link, the link we provide, you'll get a 15% discount off the best price the platform is offering at that moment. So I'm sharing it with you now, in case you're watching from your phone or from a typical smart TV and you don't have a way to jot down the reference or the link. You already know the code. It's really easy, EDW, and you'll get that 15% discount. So, if you're okay with it, let's get started. And to keep things in order, since you've already left questions at 6:23, let's go in order, like the old folks used to say at the fish market, so I don't skip PUIG brands. That's a company you've mentioned here, Albert, and, well, Beltran Palazuelo also talked about it in a Sanhedrin. He discussed it, and today it actually dropped because of a downgrade, you could say, from JP Morgan, which cut its price target by 50%.
Yes, in fact, we have more questions, like Pablo's, which is the same, so I'll group them together so we can look at both at once, since it's the same question. Obviously, for me, the first thing to understand is what the incentives are. Let's also bring up PUIG's data here, okay? The incentive sell side has these people, if they could make money another way, they'd do it. If this analyst could have a fund be on the buy side, they would. So you shouldn't take their valuations and recommendations too seriously. What's interesting about the sell side is the research, the data. All that part, that field work that actually gets done, that is interesting, but the rest isn't, because their incentives are to generate fees and not look bad. So obviously what happens is that the price targets and valuations they make just follow the stock price. ICDROC, we see it here. This went public at a very high price, 24 to 25. They had a buy recommendation. That the fundamentals have improved, they lower it to half. If the price if not 24 was 36, they'd raise it. So you shouldn't pay attention to what they say, because these are people who really don't have any skill when it comes to investing. They're okay with the data and all that, but not much else. Regarding PUIG, I've read the report. The note they released is interesting. It's good because it provides much data about the sector, which we need to pay attention to. But then they build a narrative that fits what the stock price has done, and that's what they present. It is an opportunity. Nothing here is a buy or sell recommendation. It's purely for educational and informational purposes. It's a company in the luxury segment. Fundamentals performed well. Now they've slowed, but revenues are good, growing, and brands have spectacular margins. It makes sense. They know to care for their brands and evolve them. Now they're focusing on the niche segment, on niche brands, in an interesting way. This year they're going to grow a bit less, especially the perfume segment, which is a little more stagnant. But in the skincare and cosmetics areas, they have a lot of room to grow, and now it's starting to be reasonably valued. Initially, it wasn't, but now, for me, it is. You already know that, for example, what you can do is, aside from building your own models, you can also use projections from analysts, optimistic scenarios, etc., which are also provided, for example, by Pro Investing Pro, which we use. And here, with a free cash flow projection methodology,
Discounted.
cash flow discount, and a discounted cash flow tells us what the target price could be. So the fair value of this is higher. This could easily be worth 25 or 30 euros, and I think it's going to surprise us on the upside. Consumer spending is weaker, and it could slow down, but they have a lot of capacity to grow. In cosmetics and skincare, it's a luxury segment with incredible margins, and it's very well managed. We could complain that the governance side is a bit questionable, because whenever there's a controlling shareholder, there are always risks, but honestly, with Mark Poo, it's being managed brilliantly. So, well, I like it. I think these valuations make sense, that it's reasonably valued, and I wouldn't pay much attention to those, let's say, models or notes from JP Morgan because, as I said, if they were really valuing this properly, they wouldn't be doing what they're doing, they'd be doing something else.
Albert, JMS asks a very interesting question about PUIG. He saw that to acquire 65% of Dr. Valrohr and Brido, they used a revolving credit. He asks if this is common in companies of this size. Of course, here, especially for those of you with experience in SMEs, small caps, and other family businesses or business ventures, usually long-term investments are not financed with revolving credit. Maybe that's what JM was getting at with his question. What happens is that sometimes listed companies, due to their size and scale, can have other options available to them. I don't know, Albert. What do you think?
I don't know the details of the transaction for Barbara Stern that they did, whether it was with revolving credit or not, so I could look into it for you. Also, I think Xiaoma, who's on the research Discord, might know, so we'll check it out. But it's not common, as Antonio said, it's not the usual thing because it's not the ideal instrument for this kind of operation.
All right, let's continue. We're also being asked, look, PTAO Smart City is asking us about graphite. Albert, do we have graphite covered?
I was looking at some graphene companies. I mean, it's not the same thing, but I think he meant graphene. As for me, I think the material has a lot of potential and all that, but I didn't find, or I couldn't find, any company that really fit what I was looking for. We could take a look, but I do think that as a material it has a tremendous future. In fact, Along with tin, it was one of the materials with the best potential for this decade, according to several analyses of metals. But I didn't find any company that interested me. If you send us one, we can take a look at it.
Iker also asked us about the Sintana deal, which the market really didn't like. Have you had a chance to look at it?
Yes, the assets make a lot of sense. In the end, you have to think about how the world is structured, right? Because, of course, someone might think, hey, they have assets in Namibia and now they've bought some in Uruguay. So you might say, they really don't seem to fit together, do they? So actually, they do fit together, because you have to understand how the world works. I mean, before continental drift, the continents were joined, and the part of Uruguay lines up with Namibia. It's actually the same basin, okay? So I think a lot of people haven't thought about that. They wonder, why are they going to Uruguay? It's a different jurisdiction. But it's actually the same basin and the same geology as what they're already working on. The asset makes a lot of sense to me. I really like it. And I also understand the complaint, which is basically saying, hey, if you really believe they're going to do the Mapine farm out this year, and that's going to mean your shares will at least triple. If that actually happens, as stated, then why not dilute later and do the dilution then? Obviously, I'm not on Sintana's board. I wish I were, so I could know exactly what their reasoning was. But my take is, okay, they said they're going to do the farm out this year. We'll see if they actually do it this year. The problem is the uncertainty, so postponing your plans without knowing how this will turn out or when it's going to happen, etc. So I understand that their reasoning has been to say, hey, we're not going to postpone it. We're going to do it with what we have now, and that's it. But for sure, that's the part one think hasn't really fit well. The asset is good and it makes sense. They've always grown through acquisitions. That's what the company does. And you use your stock as a bargaining chip or currency. The problem is the timing.
Remember, as investors, there's much we don't know. What if, just making this up, that asset had another buyer and you couldn't wait?
People say if they'd done it at 50 cents, or if they do it now and the pharma unit and everything goes back up to $1, dilution would be much less. That's obvious. You can see it on the chart. Not the same to dilute at 10 cents as at $1. You dilute 10 times less. So that's the complaint, a 25% dilution, which is quite a lot.
Luis de la Torre asks us, with the recent rise in the model portfolio over the last few weeks, does it feel like rotations are coming, or are you going to keep focusing on the current companies? Well, on Wednesday, there's a live session with Albert, a big one. For those of you who aren't in yet, for just €1.50 a day, or 50 euros, you can be part of research.
Like Luis says, look, in 2022 we outperformed the market by a lot. In a negative year, we had nothing. In 2023, even more. In 2024, the same. And this year we're up around 37 or 38%, while the S&P in euros is up about 2. So we're beating it by 36%.
Things are going well. I see potential in what we have. It will go well, but we're making rotations. Luis, if you're on Discord, you'll know we made a sale yesterday and a purchase.
Yes, we will keep making rotations, but it's important to understand the model portfolio's goal to maximize profitability. Many ideas are shared in research, our personal portfolio, and colleagues' comments. Those paying attention, following, and acting will likely achieve a return of plus 60 instead of our plus 37, no problem. But not the goal of the model portfolio to achieve a positive return, double digits, and to outperform the benchmark. That's the minimum goal. But above all, the goal is to illustrate our investment philosophy and to show how, by doing fundamental company analysis and so on, we can turn that into ideas that are truly profitable, very profitable, and can beat the market. So the idea, the objective, is educational and to demonstrate how that can be put into practice. So, with that, what am I trying to say with all this? We don't do many rotations. we don't try to optimize timing. So I think the ideas have room to run with tailwinds. We'll adjust as needed, but we're not going crazy with positioning, obviously. New Year's start coal wouldn't perform. Could have rotated something else, discussed, model portfolio, made sense belief will do well. One Carmel Sipper said to hold on to it medium term because many people have different portfolios, backgrounds, time, and availability. It's an idea that will make sense long term. But you're not optimizing every tick short term. Instead of aiming for 37, we'd aim for 60. As marketing, it's great, but it's not as useful for our subscribers in terms of methodology, which is what we ultimately want to teach. This is meant to be educational.
All right, let's continue. There are a ton of questions. Here, Pablo Postigo asks us about Braskem, our opinion on Braskem and its latest news about a possible capital increase.
It's hard to know if it's a capital increase or what kind of debt. This company hasn't diluted in the past. Companies like Petrobras are very careful about shares they issue to avoid ownership problems. But honestly, the announcements about possible restructuring were really bad. We'll see if it's debt, a write-down, or a capital increase, but it's not looking good. We've already exited, as you know. I'm saying this publicly because we're no longer in, but it doesn't look good.
More things, more things. Javier Gonzalez says here, Hi Albert, I see a lot of potential in copper. Any interesting companies to start looking at?
Yeah, we do find it interesting. Antonio, comment on copper, Grubber closures, or anything else. I can add something too.
Let's see, I'm not sure to what extent, Javier, if you're part of Reset, we can also talk about this, always keeping in mind that there are key points that we owe to our subscribers. But it's definitely a topic that's been worked on a lot in Reset, because we're dealing with a key metal, a metal where, even before any events like the ones Albert mentioned about mines that made up a significant part of the global supply, it already seemed like they weren't coming back. Even before that, the supply and demand just didn't add up, it didn't match, and it looks like prices could indeed go up. So, well, in Reset, Albert has mentioned one or two positions, one of which we hold, and I understand that, Albert, you'll also be discussing this topic in depth on Wednesday.
Yes, one that's public, because we can talk about that one since I've mentioned it 100 times, so it's public. It's Amerigo Resources, right? Other ways to play this? Well, no, but in this case, since it's public, today it's dropping a bit, just like everything else. But we bought it at about 1.5, more or less, around here at 1.5. Yesterday, it even traded at 3. The free cash flow yield this is going to generate is insane. We can see it here in the cash flow or in the dividends paid. In the end, this has a market cap of $320 million, and with copper at 4 and change, etc., it was paying out 30 million while paying down debt and buying back shares at the same time. So you can get a rough idea of the fundamentals here and why we find it interesting and have included it in our model portfolio, right? But there are other ways to play this that we've used in the short term. This week news, a reduction in guidance at Quebrada Blanca 2, problems at Graberg. Copper supply problems mounting. Yeah,
Pablo Jose Seguin asks us for our opinion on Grupo San Jose. Look, this is one of those companies that I always admit I haven't really looked into, but it's always seemed interesting to me. He says that their cash and holdings are almost 100% of their market capitalization. The thing is, construction companies in Spain aren't really the sector that attracts me the most, even though I understand and know they have some really good projects in Madrid and elsewhere. Can't remember the names right now. I just can't recall. But honestly, I haven't looked into it.
I don't know it either, to be honest. I know what they do, but I haven't really checked them out.
More questions coming in. Well, this one had to come up. Let's see what we have to say about ASTS SpaceMobile. So, when is the new launch? Next week. This one is a real rocket. I posted about it in the Sanhedrin, even included a screenshot from Discord. A follower on Twitter told us, oh well, the profitability and all that. In the end, keep in mind that what's clear is that a fund manager, an investment fund, is always audited. Hey, that's audited by the CNMV, so there's no tricks or hidden stuff there, right? But keep in mind how the dynamic of the research service works. The dynamic of the research service is that for 3 years now, it has been sharing trades day by day and weekly profitability live in front of subscribers. Fortunately, are now many, thanks to the trust, we're over 1,000. So, you see, there's very little room for manipulation. I mean, if you're saying, hey, I'm buying STS, as was the case, at 22 and giving it this weight, the math is straightforward. There's not much more to it.
And it's not just Antonio. Look, let's see if I can show you something, because people think that, of course, if you put things in, I don't know, an Excel sheet or whatever, or if you don't keep updating, things could be hidden, or not everything gets shown, and so on. What I want to show is, as you already know, we replicate. This portfolio is a portfolio that, you might say, well, it's a demo portfolio, let's say, from interactive brokers, etc. But this is a portfolio that we actually replicate. And I want to show you here that this isn't about sharing any position. Let me know when you're ready. Okay, so this is the VAL model portfolio. Obviously, you can see here the year-to-date performance. This starts this year. Why? Because until recently, we didn't have this account, okay? But that doesn't matter. The performance for the year is still accurate, right? Year-to-date, so before it was 0 and now, like we said earlier, it's up 38% as of yesterday, or I'm not sure what it shows here. Well, 40% today. So yeah, 40% year to date. And we keep replicating this, taking screenshots, capturing the data, sharing the reports, and so on. So when people have doubts, it surprises me a bit because there are over 1,000 people, more than 1,100 watching this, auditing it, right? But that's always going to happen. Back to ASTS, they're asking, are you sending it out this week, launching it this week? No, they're doing the shipment, okay? This takes 2 or 3 weeks. This will be in November or December. There's a credible plan and it's underway. Things will move much faster. They signed a new agreement with Verizon. A definitive commercial agreement. Things are going well, we can see. The stock price has moved, it reflects success. There's operational risk that some launch might not go well. But if it goes well and this service makes sense, it's an infrastructure play and a duopoly in a service everyone wants. You have a product that's easy to sell.
Look, Miguel sends us his regards. Don't think he skipped out today, but I'll tell you in advance. Miguel and I recorded a conversation in the studio with a valuation expert from the San Telmo Business School, and it was an absolute delight. I'm already counting down the days for the editing team to work their magic on it, because it was fantastic. If you like valuation, we talked about business. what an M&A is like from the inside, discounted cash flows, and so on. Honestly, it was an amazing episode. Anna, you had to join in late, so we're going to have to mark you absent, even though you're one of the top ones. Al has already mentioned this, Anna, who is a subscriber, sending her a shout out, by the way. Well, she's a great friend of the community, and she commented on it. Look back, because Al has already shared his opinion.
And yes, let them ask us later on Discord too. Yeah, no problem.
More. Alberto Jimenez, good afternoon. I really like Udemy and Coursera. I've used them since online learning started. Their platform is well set up, their business model, and they have good margins. Well, you got cut off there, Alberto. I thought you were going to ask us something about them. Or maybe that was your question. No.
I like the product. I've tried it, but I had never looked at the fundamentals and honestly, I didn't even know it was publicly traded. Antonio, I don't know if you've used it.
Yes, I have. Look, it's funny. Back in the day, I did. Well, Udemy, yes, I used it years ago for some specific skill topic. I remember back in the day, when nobody knew about ChatGPT, I made a mini course on ChatGPT. That's ancient history now. And I used Coursera back then for a really cool program that I liked. Well, that must have been in 2016 or something like that. Another personal story was a course on sports management. Back then, there were no crazies. It didn't even exist. I went to a project, and it was a Harvard course explaining how to manage an NFL club. Well, just a story. Yeah, I know it, but I didn't know it was publicly traded.
Look, in the end, I don't really know it, but looking at these numbers, I don't like them too much.
No, actually, they do seem to make sense. The growth is insane, great gross margins, but then when it comes to marketing and so on, they lose it all.
And it doesn't generate anything, so it just keeps getting diluted a lot.
It's just that I don't know to what extent this company, even though it's publicly traded, I don't know, and maybe I'm just taking a wild guess here, but I don't know to what extent this company's goal isn't really to make money as such. Maybe it's backed by foundations related to major US universities, and maybe that's not its purpose. I don't know.
Hashtag if you think that's okay.
No, go ahead, finish.
Cash is different from profit, that's true. The problem is also over stock-based compensation. Well, it's the typical tech thing. I like the business model, but I don't know if you're really going to find that much value here, or if they have a plan to monetize this and change things. The thing is, you really need to know the company better, but at first glance, just looking at the numbers, it doesn't impress me.
The Wall Street Fox, that's a good name. Sintana, maybe move back a little bit. We talked about it around minute 10 or so. He did a really interesting analysis of today's deal and more. Albert, more questions. Look, Albert, this one also comes up a lot. Jose Maria Shion Albert, do you think the market is punishing Dynaco's stock price too much? It doesn't make much sense with gold prices at these levels.
Yeah, but they're missing some reports. I mean, as soon as they start reporting real operational and financial improvements, which will go hand in hand with the operational ones, I think the trend will change. But until that happens, since they used to report monthly, we had more updates, but now it's quarterly. So, well, soon we'll have the results. Earnings season is about to start. We'll cover it. That's what's holding it back. No news. For worse.
We also have a question from Eduardo Escudero. Hey guys, do you see the price of natural gas? It seems like there's an oversupply of LNG in the world, and in the US their reserves are full.
Yeah, no, I mean, the price. Natural gas could obviously see a correction. Up until now, everyone has been talking about its surplus, like you said, in export capacity, natural gas, and so on, and that by 2027 or 2028, this will start to correct from the levels we've seen since 2022, which have been extremely high in Europe. I'm talking about Europe and partly Asia too, of course, the part that gets LNG. But even so, the price, for example, in the US, will definitely go up a lot because as shipping costs rise, there will be a structural convergence and so on. So even if prices drop from $12 or $13 per MMBTU to 10, they're still extremely high. So I don't see a collapse like the consensus does. I actually like it more than what the market is currently pricing in.
All right. And without straying too far from the gas sector, there was a question here that I was going to put up on the screen, but now I can't find it. It was about Golar. Hang on. Sometimes our friend Stringer plays tricks on us here. Well, I saw it earlier. Well, when I saw it. Look, here it is. Sorry, here it was. Excuse me, Gustavo Vidal. All right, guys, Golar's drop after announcing their intention to add several ships. What do you think caused it?
Well, first of all, the uncertainty in Argentina plays a role because, as you know, the elections are on October 26th. It's just around the corner, and there's a lot of uncertainty about what would happen to Golar's contracts if the Liberty Advances party of Milei loses or gets a really bad result. They say it doesn't affect them, that they're protected. I think so too, that things won't go badly for them, but that's still weighing them down. And then there's the cash flow, which is supposed to come in 2027 or 2028. So right now, patience is at zero. Anyway, I think that by the end of the year, or at the latest the beginning of next year, they're going to announce a new ship, a Mark III, and that's going to change the outlook quite a bit.
We'll wait and see. By the way, Gustavo says your quantitative and value investing classes are amazing. Well, these classes Gustavo mentioned, by the way, are part of the stock market investment course. Stay tuned because a new edition is coming in November. Today we had a value investing class. I can't keep it to myself. In case you didn't know, it was with Ivan Martin. Let Ivan Martin de Magallanes give you a lesson in value investing. Those are the things that don't have much price.
It's not as good as the one we did on deep value, but there it is.
We are not going to compare you with Ivan Martin nor with me, Albert. You are the homeland of Wall Street crazies. We are not objective.
Yo en mat.
Yes, a lot of common sense, Oscar. What potential do you see in ASPI?
Yes, one from DM, a lot.
Power, as much potential as you want. Look, ASPI, for those who don't know it, is a company related to nuclear energy, but not just nuclear energy. It also has a range of other products like molecules for the whole medical field, etc. It's a company that could practically be considered a startup. It's a company that's already signing contracts. It has already signed an important contract which, strangely enough, sometimes the market. Well, when we thought that contract was going to be a catalyst, it actually wasn't, so you really have to. I would say you need to be cautious with ASPI. ASPI is a position I'm playing mainly with bullish tunnels. For me, it's a very good position to play with options. For those who know it, I'll be honest, I had heard of it, but it was mainly XGS in our research who explained the reasons, and I liked it. They haven't liked the corporate issue related to the current CEO and others. It seems it hasn't been entirely above board. I don't know, Albert, what do you think about that? But it's a company that, if you, Oscar, are asking about its potential, it has a ton of potential. The thing is, you have to keep the risk under control there. It's a company that still has to validate a lot of things about its technology. So be careful, because we're talking, in a way, about the opposite case of Golar. With Golar, you have the cash flows already locked in just around the corner. Even if they don't announce any new ships, it would still have value on its own. Here we're talking about something very different.
Yes, that's right. In the end, it does seem that, on a small scale, they're confirming the validity of their technology and product, but they still need to prove it at scale, start getting commercial orders, expand their plants, and so on. So, for now, it's very speculative, let's say, but the potential is huge.
Look at this one, Jesus Pinazzo. It's a good question. Albert mentioned that Coursera doesn't generate anything, and neither does STS. Why does one do it and the other doesn't? I'm speaking from ignorance here. Thank you.
I'm not saying that Coursera does. I don't know it. That's why I understand. What's their plan? Okay, if they tell us, look, we're burning cash, investing in such and such, or growing, scaling, etc., then you can choose to believe it or not and play along. But if you see they're burning cash, diluting, it doesn't make sense. In TEI, as you said, they don't generate it. The cash has been diluted. I know that plan, it makes sense to me, and I see a path toward generating cash. So the only difference, it doesn't mean Coursera is bad, you just have to know it. We can analyze a company now, or use the fundamentals from here. For a mature company, that's valid. But when it's something that has a totally transformative plan, that's not going to show up in the numbers, so you also have to do other qualitative analysis work. So in the case of Coursera, I don't know it, and that's why the numbers don't add up for me, but the rest might make sense in the case of ASTS, and that's why I like it.
Hey, while we continue, 2 messages from us, Mando. First, just a reminder, you already know we have a partnership with Investing, and here you have a 15% discount with the code LW. You'll find the link in the video or audio description if you're listening on iVo, and also if you're watching on smart TV or elsewhere, there's a QR code there. Just enter WWS and you'll get a 15% discount off the best price. Stay tuned because there will be new discounts and other updates coming to Investing. And whatever comes, you can use our 15% code. And the second message I want to share is that we don't want to be overwhelmed by our own success. Just so you know, right now there are 426 people here, and sometimes the Q&A session even surpasses the Sanhedrin. So we're going to try to answer all the questions. But while Albert is answering, I'm pointing them out. And sometimes before we can answer one, 5 more have already popped up. So if this keeps growing, we're going to have to start selecting. There have been Q&A sessions where we managed to answer everything. I have a feeling today won't be one of those days. So, well, that's a good sign.
We'll keep answering as we go. I feel bad for the people we leave, so let us apologize. But, well, it is what it is. It's inevitable, too.
Yeah, with the growth, thanks to you all. Well, look, right now, just on YouTube, we have 160 people. Well, on Twitter and so on, for 130. Stringer is telling me right now, Uranio Rafael Munoz. How is the uranium sector doing specifically? Lou has had a massive surge. Well, Lou is the stock in my portfolio, and I don't think I'll ever have another one with that kind of percentage gain. It's grown by about 6,000% or something like that. The shame is that I got Lou from a stock swap with another uranium company back in the dark ages, and I must have had like $300 in it, something like that, a real pittance. And now it's up to 6,000. I'm telling you this from memory and being totally honest. If it had been a position where I had put in, I don't know, just 6,000 euros, maybe I wouldn't even be here with you today. Miguel would have already replaced me for good, and I'd be in the Maldives. But the truth is, Lou, for those who don't know it, is a company that has had a massive tailwind. And as you know, when it comes to uranium, there's the raw uranium that's extracted, but that raw material isn't what gets used in nuclear power plants. It has to be enriched first. So Lou, as they say, has had everything go its way, because Lou is Centrus Energy, the only American uranium enrichment company. There really has been, in the whole issue of the uranium ban on Russia, we could say there have been some shady dealings. It's hard to control whether it's actually being produced or not. But when it comes to the export of enriched uranium, that's much more regulated, and it's true that the rules have been followed. So, well, Lou basically has a monopoly on enriched uranium in the United States. When we see that nuclear power plants, with everything going on, data centers and so on, nuclear plants are becoming essential. In fact, the only country that's still anti-nuclear power plants is us Spaniards, of course. And you can already see what Red Electrica is saying. They're basically saying, hey, let's not mess with what puts food on our table, because we could end up with another blackout. So, well, tailwinds in the sector. We're also playing uranium in a couple of ways. And today, in fact, there was talk about one of them on Discord. And you, Albert, said it makes sense, and we're following it very closely. I don't know if you want to add.
Anything. We've got plenty of ideas. What we're missing is the chance to play them all, right? But yeah,
Look, Javier, Albert already answered this a bit at the beginning. It was his first take, the potential of gold as a commodity. I don't know, Albert, if you want to add anything else or if we should just tell Javier to watch the first part.
no, we can talk about that a bit, because you have to understand that gold isn't a typical commodity, its industrial use is minimal, that's not what moves the needle. It's driven by other kinds of flows, currency devaluation, geopolitical divisions, the increasing weight it carries in reserves, speculation, its monetary premium, and so on. So those aren't flows like the ones you see with other commodities. Here, things like cost curves, supply and demand, and so on don't have as much influence because all the supply that exists is going to be consumed. So you shouldn't analyze it like you would other types of companies. I think the tailwinds driving it are unstoppable and will keep going. Like we said, monetary devaluation, global geopolitical division, the loss of the dollar's hegemony, and so on. So, since I believe in those tailwinds, I like gold.
Look, this one from Joan Maria Algara is really good. Here's another idea. One day we should do a whole episode just on how to use investing. Because honestly, it has a lot of different, let's call them tools for investors, right? If you'll allow me the term, here it says 2 ideas taken from the Investing Pro prompts. Here, through algorithms and artificial intelligence, investing has tons of data, so it suggests tips, actually picks, of stocks that could appreciate in value. For example, it says Group Dynamite, up 75% in a month and a half, and Vazat, up 25% in 9 days. They wouldn't have.
Done that in the pro picks, for example, in technology versus LSK.
All right, as I was saying, another feature. Raul, when a company is listed on several markets, which one should you buy from? What do you all take into account? Is it just liquidity?
No, not just liquidity. Liquidity is very important, it's the key factor, but you also have to see if any of them have extra costs. For example, if you buy it on in a smaller, less liquid market, there might also be extra commissions, and so on, in addition to the liquidity we've mentioned. And then there's also how closely you can follow it, if you can buy it, just as an example, in Europe or in Australia. And if it's the same in terms of liquidity, cost, etc., it's better to buy in Europe if you live here, because it'll be much easier for you to follow it, trade it, and so on. But normally what I choose is the main market it has.
Yeah, that happens to a lot of investors who don't like Australia because they can't trade at night. What do you think about PayPal? I like PayPal. PayPal is a stock I like. I think I've shared an options trade or two in PayPal more than once. I've never actually owned either options or shares of PayPal. But it's true that it's in a tough sector. Hey, by the way, in the end, Locos de Wall Street and Resi are also working behind the scenes. And if all goes well, next week a fantastic report on the entire restaurant sector is about to be released. Shout out to the person who said that in Resi we only talked about commodities, and the next one in the pipeline is payment methods, so that's great. I don't know, Albert, PayPal falls within your scope, I assume. No.
No, and I like it because whenever we see a chart like this, something that, being tech, being a market darling, in 2021 the market wanted it, wanted it, wanted it, wanted it, and now it seems like it's worth nothing. Yes, it is true that they are having it. It's having problems or is experiencing disruptions everywhere, and there are many doubts about the terminal value this may have, and the possibility of generating future cash is now optically very cheap. But of course, we have to see if this can be maintained, right? Etc. If you're going to be able to defend, let's say, your business model. So I like it. I'm always interested in something when it has a chart like this, because where there are drops like this, there are usually opportunities, and you have to distinguish between value traps and real opportunities. In this case, I've never gotten in, I haven't looked into it deeply, but at least it's an interesting place to start looking, just like that.
Notice that in this sense, there are 2 companies. I'm sure there are many more, But these are the ones I know right now that are tech-related and have a similar chart, where you can clearly see growth in sales, growth in profits, even growth in margins, and yet the stock price is going down. Those are PayPal and Adobe. It's true that there are people who say both of them are value traps. But if you look at that classic mantra that says the stock price follows EBITDA or follows cash flow in these two companies, as of today, that's not happening.
It's not happening.
When Alberto sees us, he asks about rare earths. Do you have any favorites? Well, Tra just bought a company. Was it publicly traded, Albert? No, not really.
Yes, Talon has Trilog. Sorry, yes, they have a stake there. Honestly, it's an interesting sector. The thing is, you really have to distinguish between quality and not. For example, look, Ramaco Resources. I don't know if you know it, Antonio. This company is in coal, okay? But what happened is that they also made a rare earths discovery and a PE. So notice that when this was just coal, or when they said it was strictly coal, at the peak of the last coal cycle, it reached 14, and so on. Now they say they have rare earths. They do a PE, which to me makes no sense at all at the prices they've mentioned. And just because of the speculation that this could develop, look where it is. It's not at 46. So that already gives you an idea of where the focus is now, how things move, and so on. But most of these are never going to generate a single euro from this, right? So, well, you have to be very careful. I find the concept interesting, but it's not easy to pick companies. And don't let yourselves be swayed by a pretty PowerPoint either.
Look, this one from Miguel Mendez is very interesting. He says, Hi Albert, what do you think about buying Petrofac bonds at 5 out of 100? Careful, careful there. The market is pretty much pricing in a bankruptcy. He says they're going to be converted into equity for the future of the company, along with an additional injection of fresh money. It could be a Valaris 2.0. Well, Valaris, for those who don't know, was a case of a company that was actually bankrupt. It was in what in the United States is known as Chapter 11 bankruptcy, which is a bit more reversible there because of their bankruptcy laws than it is in Spain. And the truth is, those who got into Valaris at that time made money. Obviously, the company was considered bankrupt. And here Miguel is telling us about these bonds. I wasn't aware of this situation.
No, me neither. And I have to say, what you're doing is risky because of the timing. You don't know when this will be resolved, under what conditions it will be converted. They'll probably give out some warrants in addition to shares, which will work out well for you if this takes off. It could make sense, but I don't know the specific case. It's a risky move, and I don't know how much it pays off compared to waiting for Chapter 11 to end and buying calls. If you really believe in this, like what happened with Valaris, etc., the warrants will have value, it'll be good, and so on. But anyway, I don't know the specific case of how the credit part of Petrofac will be resolved. If you know it well and have it down, it could make sense. Yes.
ALX train us. An agreement between ASTS and Verizon was announced. Change of CEO at Verizon. Not going over well. Not going over well for Verizon. Verizon stock hasn't reflected the agreement. Of course, I mean, really, in my opinion, seeing all the hype around ASTS, if the technology actually works, I don't know about you, but I just don't see it. For ASTS, sure, but for the big players, for the major telecoms and so on, they're really not going to be able to charge much more for that service. At least for the retail customer.
Right? Exactly. You have to have it and it's an important service upgrade, etc. But let's say you charge $1, $2 extra a month. Sure, for the telecoms and so on, it's not that significant. And besides, a lot of this is going to go to STS. In the end, you can reach a commercial agreement, but the big chunk is going to go to ATS, which is the investment part. You bring in the customers, in exchange you get the service, maybe exclusivity in a certain area, and so on, but it's not going to be a source of income like what SDS will have, which is the big winner here and the one that will have the monopoly. All the others, Each will compete in its own region and have that, and maybe charge a little extra, but not that much. So that's why it's not that it doesn't feel right. It's fine, you have to have it, but it's not going to change your, let's say, your financial outlook.
Javier, great show. Thank you. Diego Martinez, you guys are awesome. Thank you. He asks, good news from tennis in Holland and more catalysts. Well, they had a deal this week, and the market took it really well, right?
Yes, exactly. In the end, it's a retail.
Point to this as one of our errors of omission. I think we don't have any regrets in that sense, I think.
Yes, exactly. In the end, they made a good deal because these assets are much better than those from the previous deal in quality. It's true it's not as much of a home run in price, but in exchange, you get much higher quality deals. They also did it with almost no dilution, which is very interesting. And the real value isn't just in what they're buying now, which is good, but in the potential for development, optimization, and growth. So the stock went up a lot, about 30 something percent, but I think that's still not enough for what they've acquired. So a very good day and good news, just as you said.
Well, congratulations to everyone who was holding it, since there were a few people here on Resisor as well. So, as we were saying, here trade tells us that if the telecom is the only one with an agreement with ASTS in its market, they can definitely charge a significant premium, maybe even more. The way I see it, maybe it's more about governments and such, because in the end, I don't know, as a citizen, do you think that's something that can really be passed on? For example, I don't usually go hiking or do things like that. I don't know. I'm just asking, or I don't usually travel, so I don't really know.
I mean, AST charging governments and the MNO charging governments is more difficult, and like our colleague said, if you have a monopoly and you want to squeeze the customer and they let you and they're willing to pay, well, okay, great, right? But I think you can't. I mean, the profit, the juicy part of the pie clearly goes to STS. So, well, if you're the only one and you can negotiate, okay, sure, but I don't see it as that clear.
Jose Ignacio is asking if we've talked about Glencore. Let's see. I don't know if you can talk about Glencore. No.
Yes, in the end, it's a company that, as you know, has two branches, one that's mining or industrial, and another that's trading, acting as an intermediary in raw materials. It's done really, really well, first because it was very cheap, and second because it has exposure to copper. And now, with how things have been going in the last 3 months, you can see that from the lows of around 300, it's now at 360. Historically, it's not a high price, but it does seem like the cycle is starting to turn, both for industrial metals, which are gaining momentum, and for coal, which is about to pick up again. So, well, it's a company that probably isn't the most leveraged way to play anything, but it's high quality.
In the end, you have to keep something in mind. If you think about when a metal becomes trendy, where can the big players invest? That's the advantage we have in the retail market. We can buy small companies, but the big funds can only invest in a handful of companies. Look at Barrick Gold, remember. Barrick Gold seemed like it just wouldn't take off even as gold was going up, and in the end, it's,
Worst in quotes among mid caps. That's where money goes.
of course. Nacho also says thanks for the amazing show. Well, there are 500 of us live right now, so thank you to everyone across all platforms. We appreciate the likes so it can reach more people. It's clear you're enjoying it, and with every Q&A session, more and more people join, so thanks to all of you. You're asking us how we see GMS.
Very good. It's a company you know from the offshore sector that has support lift boats, let's say. They've done really well, they've deleveraged, and it seems like now it's a bit stagnant. But look, we actually shared this one in research for so you get an idea. Here in 2023, someone might say, hey, it's a bit stuck, right? Because of course, 2023 hit its peak and it's been moving sideways for a year. Yes, but it comes from 4, and for fundamentals, you'll see now, especially in the balance sheet, which is the most interesting part. This is as of the end of 2024. By 2025, it's even better. Anyway, you can see long-term debt is being reduced very quickly, even more so, and at the same time, fundamentals like EBITDA are also improving. We can also see this in the income statement. Maybe EBITDA isn't the best metric here. EBIT is more direct. So you reduce debt, improve profitability, or in other words, create a deleveraging story. Rates keep improving, utilization as well, but right now interest rates aren't much of a focus, but honestly, they're doing really well.
Alvaro Otero is asking if we know Ero Copper. Yes, we know it. There's a video on Summit Network with Javier Sargento, Javier Chico, talking about Ero Copper. They say it's a great company to play the copper market, right? Alvaro is asking here. He confirms.
Yeah, I saw. What's the name of the video? It's good, and if there's a bull market in copper, then it's probably going to do well. Palos, that is already reflected in the price. I'm not saying it obviously can't go up, but notice that from the lows, well, this is April, but etc. Now it's had a good surge since August. I mean, it's almost doubled. Well, I don't know it well enough to really give an opinion. I watched Javier's video. I thought it was interesting. Check out that video if you're interested and see what you think too. But yeah, if there's a copper trader, they'll do it.
Right. Baca asks if you know STS Group.
No, I don't know it. Do you know it, Antonio?
No. They're also asking us about Janssen chip building, I think. I don't know Carta either.
No, but look, we have an expert here who knows those rare ones because I've never heard of it. This one either. Young shipbuilding in general, I don't know, but if it's a shipyard, they usually don't make big profits because of the high capital investment required, etc., and there can be defaults during the bad part of the cycle.
Here's another one, says Alberto Jimenez. Okay, let's go, Alberto. See a lot of upside. Sigona, thank you for everything, you're the best. Sigona, a lot of upside. I don't think so. Begonia is a company I know about because of Edgar, Gabriel Castro, and so on. I think most of the upside has already happened, in my opinion, though I'm not an expert. Does that mean it can't go up? Yes, it can go up, and in fact, well, in the end it's one of those special situations. I don't know if you're familiar with the case, where, well, everything points to the management repeating part of the move or doing something similar to what they already did with that other company. I can't remember the name. Well, it was also a Spanish communications company. The name's not coming to me, but in short, if you ask me, it could keep going up, but I think obviously not nearly as much as when people first started talking about it when it was at $5. Sorry, £5. It hasn't changed. Yes, 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 yes. More. We're reaching the program's end. Let's try to answer the remaining questions, so please don't send any more. Subscribers already know you can ask as many questions as you want. We answer everything. If not, you can also leave your questions in the description. Barca Banana tells us that in the next 6 months, good flows of district metal are going to come in. Well, that's what's expected.
Yes, most likely yes, through ETFs and so on. We'll see, right? But it also looks good if the ban is lifted, etc., yeah?
Torcal Electronics. Will the price of silver surpass its ceiling? Will it stay at this price?
I think the same tailwinds that we saw for gold earlier are still here, and even more so, because from an industrial standpoint, it makes perfect sense. In fact, we have an article a deep dive that's also open, so you can check it out, about silver as an investment asset and why it's so undervalued. I think it's a psychological level. It's normal for it to have pulled back, but eventually it's going to break through and keep going. I think so.
Look, here Alex mentions Mito Quintana. Marito must be happy with STS. They've made a purchase in a waste company. Seger Squares is asking us how we see the circular economy.
Tailwinds. You know this is trendy now at Secure Was. I've seen Marito and I've also been talking to METC about resell and so on. I think that obviously Marito has a very good eye. Fundamentally, things look really good. It didn't seem so obvious to me at first, but there are a lot of tailwinds, so I see the sector in a good place, let's say.
Then Charlie asks us about sodium batteries, Cat Nextra, for the PGM thesis.
I'm not familiar with the specific battery they've developed. They will probably give electric cars much more range, and so on. I don't get that. I'm sure it's amazing, but I don't think it will change things. The other thing is, in the end, electric cars are out there too, but they're not more efficient than internal combustion cars. At least in their current state, hybrids are more efficient, and there are many parts of the world that aren't going to switch directly to electric. Right now, with the way the grid and infrastructure are, it's not possible to adopt it on a massive scale and have it succeed. It only works when just a small part of the population is the only one using it. So I don't see it as a threat in the short term, and if it is in the future, don't take this the wrong way. But we won't be around by then, so it won't matter much.
Look, Albert, I was about to finish a Sanhedrin. Sorry, a Sanhedrin, a Q&A session, without talking about oil. I don't know if that's a good thing, not talking about it. And here, well, actually Francisco, who is also a subscriber to the newsletter. I haven't mentioned the nickname he uses. Docamista, good evening. Following the Wall Street crazies theme, do you have any opinions about the oil and gas giant Equinor?
Operationally, yes, but in terms of valuation, I haven't looked into it. They're doing very well operationally, etc., but the only thing is I haven't seen them. Let's say, whether it's cheap or not. In Norway, there are also some particularities regarding the taxation of the companies themselves, etc., so they're not usually as profitable as others. But anyway, right off the bat, I can tell you it's probably of pretty high quality because this chart, after the 2022 downturn, already shows you some solid fundamentals for this company. It's normal for revenue and profits to spike in 2022. After all, oil and gas peaked. We see it in profits too, but the fact it held up already tells me good things. We'll take a closer look at it and discuss it further in the research.
Again, these majors have premiums compared to valuations of other mid-caps, etc., because obviously the risk or what they might suffer in a downturn isn't the same, and the market recognizes that. But I don't know enough about it, let's say, in terms of valuation.
Operationally, I can tell you that it's doing very well.
Javier was asking us about Texhong 2678, and just from the ticker, it already sounds Chinese to me. I won't be able to help you with that one.
I've seen it on El Loco del Dividendo.
You say its BR margin is inversely related to the price of cotton, but its sales volume tends to be stable. What could we expect with cotton prices being this low? Look, it's a textile company, right?
Look, I don't know it. I think I've seen it on his channel. Can you confirm that? If the margin is inversely related to the price of cotton and it's dropped, then it's probably going through a period of extraordinary profits. This generates 0.64 according to this, and at the cycle peak, let's look at 10 years.
Hey, but they don't pay dividends, right?
Right? I see it's had a few rough years, maybe like you said, because of the price of cotton. What's it trading at now? for Hong Kong dollars and it generates 1, so it's cheap. Right off the bat, I'd say it's cheap. And if you say it's inversely related to the price of cotton all the way down, then it's probably good. But I don't know anything more about it than this. If you've seen anything about the dividend, let me know. I'd invite one too, and we can talk about it.
All right then, that's it. When you see one at Vol, if you want, ask him about it, but I'm not sure if it's this one because it doesn't seem like this one pays dividends.
Okay.
Alberto Jimenez is talking about nuclear energy, so let's go with Alberto's last question. Have you guys in your crazy universe analyzed BWXT? Thanks again. Let's see, I know about it. I don't know if Albert does. It's a company that sells nuclear components in the United States. It's already had very good growth, well, like everything related to nuclear, aerospace, and defense, and it's gone up. This year alone, it's already up 66%. Honestly, I haven't invested in it. I know about it. Well, I saw it a few months ago and added it to the typical sector watch list. I have one that's all about nuclear related stuff, so that's why it's on my radar, but I can't really tell you much more than that. Well, look, we've reached the end of the Q&A session. Hey, an hour and 5 minutes.
Pretty good.
I don't know if we've broken the record. I don't know if we've gone over. But anyway, as always, I apologize for any questions that were left unanswered. Remember what I told you. Today's message is that we have a 15% discount code with investing. Remember, it's in the video description, and there's also a lot of material in the WWSS Financial Raster. Very important. Don't miss out, those of you who are already in, and for those who aren't, there's still time. This program is this Wednesday, right? Alver is the live class. Well,
Today is Thursday, 17th.
not the 17th,
The 15th, sorry.
the 15th. That's right. Well, it's a key moment for the portfolio. Albert will discuss his view on stocks for year end. Some stocks, Albert is rotating, and we've notified about them. For those not yet in, you have a good reason to join. Albert, thank you.
No, Antonio. See you week.
Great, thank you. Have a good week. Sunday, Sanhedrin is live at 8. Alvar will be there, Edgar too. You can't say we lack talent, Wall Street. Bye.